The Group Chief Executive Officer, Nigerian National Petroleum Company, Mele Kyari, has allayed the fear of Nigerians on the rising prices of petroleum motor spirit, known better as petrol, across the country. Now, over the next half hour, we will be looking beyond the business headlines by giving you in-depth perspectives on what is happening in the business world, from subsidy removal and its ripple effects to the stock market and so on. Stay with us. Well, hello and welcome to Business This Week. My name is Chinwe Nwokocha. Now, the Group Chief Executive Officer, Nigerian National Petroleum Company Limited, Mele Kyari, has allayed the fear of Nigerians on the rising prices of premium motor spirit, known better as petrol, across the country. The NNPC board said competition among major players in the oil sector would force down the price of petrol against the upward trends that have caused panic in the country. Now, according to the report gathered, queues returned to the fuel station across the country following the recent increase in the petrol pump price occasioned by the discontinuance of petroleum subsidy. Speaking in an interview, Kyari said the removal of subsidy would allow new entrants into the market. A move, he said, would aid competition and phase out monopoly. He also added, this will ensure healthy competition, which would ultimately lead to a downward review of pump prices to petroleum across the country. Now, still on subsidy removal, the Trade Union Congress of Nigeria, TUC, demanded payment of a new minimum wage of 200,000 naira monthly. It also demanded that the government reverts to its old 185 naira pump price of petrol per litre to allow for conducive environment for negotiation. In a statement, the President and Secretary General Festus Osifo and Nuhu Toro respectively said, for immediate implementation, status quo ante of PMS pump price should be maintained while discussion continues. The premium wage should be increased from the current 30,000 naira to 200,000 naira before the end of June 2023, with the consequential adjustments on the cost of living allowance like feeding, transport, and housing, and so on. Now, moving on, a quoted company on the Nigerian Exchange Limited, NGS Industry and Medical Gases Nigerian PLC has grown its total assets to 6.75 billion naira for the year ended December 2022, an increase of 21% compared with 5.60 billion naira posted in 2021. Now, the profit before tax of the frontline manufacturer of the industrial and medical gases in the Nigerian also grew by 27.56% to 704 million naira in the review period, as against 552 million naira in the corresponding period of 2021, while its earnings per share stood at 90 kobo compared to 89 kobo in the corresponding period. Now, despite the inclement operating environment characterized by the high inflation and interest rates, forest scarcity and low purchasing powers of consumers, among others, IMG recorded a net profit of 448 million compared to 372 million naira in the preceding year. That is an increase of 20.52%. Now, the federal government recorded a 930 billion naira fiscal deficit in January and February 2023. That's according to the Central Bank of Nigeria. The CBN stated in the monthly economic report for February 2023 that the estimated overall fiscal deficit of the federal government expanded in February due to a drop in the retained revenue. Now, according to the report, the fiscal deficit was 417.75 billion naira in January. The report also said accretion into the Federation account decreased by 32.3% in February relative to the preceding month on account of 60.2% fall in oil revenue. Now, it added that the development led to the expansion of the overall fiscal deficit by 22.8% due to 16.4% surge in provisional federal government capital expenditure and a 7.7% fall in the federal government retained revenue. Now, the International Air Transport Association warned that rapidly rising levels of blocked funds constitute a threat to airline connectivity in the affected markets. As a result, the industry's blocked funds have increased by 47% to $2.27 billion in April 2023 to $1.55 billion in April of 2022, that is last year. IATA's Director General, Willie Walsh, disclosed this at the 79th IATA annual meeting and World Air Transport Summit, which kicked off yesterday. Now, he said airlines cannot continue to offer services in markets where they are unable to repatriate the revenues arising from their commercial activities in those markets. Others are Bangladesh, for instance, with $214.1 million, with Algeria with about $196.3 million, Pakistan $188.2 million, and Lebanon $141 million. IATA therefore urged governments to abide by international agreements and treaty obligations to enable airlines to repatriate funds arising from the sale of tickets and cargo space, other activities, and so on. Now, moving ahead, in a more recent development, the International Air Transport Association announced an expected strengthening of airline industry profitability in an upgrade of its outlook for 2023. Now, according to the Director General again of IATA, Willie Walsh, airline industry net profits are expected to reach $9.8 billion in 2023. This represents over 100% increase over the previous forecast of $4.7 billion in December 2022. Walsh spoke at the 79th Annual General Meeting and World Air Transport Summit in Istanbul, Turkey. Now, according to IATA data released at the summit, some 4.35 billion people are expected to travel in 2023, which is closing in on the 4.54 billion who already flew in 2019. Now, the Senate has indicted the Office of Account General of the Federation over failure to repay short-term loans given to ministries, departments, and agencies from special funds accounts totaling 900 billion naira. The lawmakers disclosed this after a thorough investigation by the Senate Public Accounts Committee, chaired by Senator Matthew Ugogide, following the submission of 2017 Audit General Report. Now, according to the query, loans and debts arising from special funds accounts totaling 910 billion naira showed that the balances remained unpaid throughout the year. Although the loans were meant to be short-term, but the Office of the Accountant General in its response claimed that several letters had been written to the Minister of Finance to authorize the settlement of the loans granted against allocations of various MDAs that are affected. You're still watching a Business This Week on Viewer Televisions. It's time for a short break, and when we return, the program continues. Do stay tuned.
this 21st century where all the information we need is now in the palm of our hands. News from around the world, entertainment, celebrity gossip, sports, and much more. The only thing that you need is the right source. Viewer TV is now on the go. Simply check us out on our social media pages on Facebook, Instagram, YouTube, and Twitter for all the information you need.
Souls came together. Came together. Two souls came together. Where am I now?
Tat Fragrance, the new luxury fragrance for men and women.
Welcome back. This is Business This Week. And now, the president of the World Bank Group, David Malpass, has warned that Nigeria's parallel exchange rate is harmful as it worsens future debt service payments and increases the risk of debt distress. Malpass said this in a blog post titled Parallel Exchange Rate, the World Bank's approach to helping people in developing countries, published on the bank's website. Now, according to Malpass, about 24 emerging and developing economies, including Nigeria, have an active parallel currency market. The World Bank chief noted that parallel exchange rates are expensive and can drive corruption. He further warned that parallel exchange rate markets adversely affect the impact of the bank's project while leading to more foreign debt. Now, still talking about debt, banks' borrowings from the Central Bank of Nigeria standing a lending facility rose year on year by 464% to 4.95 trillion naira in the first quarter of 2023 from 877 billion naira in the corresponding period of 2022. Now, findings from the CBN financial data for the period shows that banks borrowing from the Airpace Bank, which had declined month on month in February this year by 14%, suddenly spiked by 775% to 3.97 trillion naira in March, and declined by 45.8% to 2.15 trillion naira in April. The data also showed that banks' deposits in the IPS Bank's standing deposit facility rose by 26% to 1.72 trillion in first quarter of 2023 from 1.36 trillion naira in first quarter of 2022. The banks deposited 587.79 billion in January. The figure rose by 14% to 668.86 billion naira in February and down by 29.5% to 471.4 billion naira in March. That's a whole lot. Now moving on, the naira has continued to strengthen against the United States of America dollar at the parallel market as it closed 750 naira per dollar on Wednesday from 763 in the 63 naira rather in the previous session. Recall naira had appreciated by 7 naira against US dollar on Tuesday after opening at 770 naira. However, the performance of the naira was largely bearish at the official market and investors an exporter window as it weakened by 0.03% and 0.04% to close at 461.60 per dollar and 464.67 naira per US dollar respectively. That is based on the data from the Financial Dealers Quotation and Central Bank of Nigeria. The CBN, the CBN operates a multiple exchange rates regime with different rates adopted by different segments of the economy. They include the Nigerian Autonomous Foreign Exchange Rate Fixing, also called I&E Forex Window, Parallel Market Rate, International Air Transport Association Rate, Interbank Exchange Rate, and Bureau de Change Rates. These are just few examples. Now, the Nigeria Customs Service has initiated a system called Fast Track 2.0 or FT 2.0 to reward traders that complied with its rules and regulations. This is contained in a statement by the Customs National Public Relations Officer, Chief Superintendent of Customs Abdullahi Mewada in Abuja. He said the FT 2.0 was initiated in collaboration with the World Bank under the Accelerating Revenue Mobilization Reforms Program. Mewada said the FT 2.0 system was initiated to ensure migration from fast-track regime, adding that the FT 2.0 was more efficient. Now, the board of directors of the African Development Bank Group has approved an equity investment of $20 million to mobilize private capital for infrastructure development across the continent. The bank, in a statement on its website, said the fund was part of Africa 20 Infrastructure Acceleration Fund 1. The Africa 50 Infrastructure Acceleration Fund 1 is a Pan-African infrastructure private equity fund that is mobilizing up to $500 million for investment. The fund is also meant to ensure value creation in strategic infrastructure sectors, which include power, energy, digital and social infrastructure, transportation, logistics, water, sanitization, and so on. Now, the Maritime Workers Union of Nigeria has threatened to embark on an industrial action over the poor welfare of its members in the shipping sector. The development has forced some operators in the maritime sector to kick, saying proposed shutdown would affect their business operations. However, the President General of MWUN, Adewale Adeyanju, while briefing journalists at its office headquarters in Apapa, explained that the group would embark on the strike action over the failure of the management of shipping companies to discuss and negotiate the welfare and condition of service of its members in the shipping sector. According to Adeyanju, shipping companies have failed to cooperate with the workers' union despite several interventions and meetings to have an amicable resolution of the unresolved welfare issues of their members in the shipping sector. The Nigerian-Indonesian Chamber of Commerce and Industry has disclosed that the trade balance between Nigeria and Indonesia has increased significantly by 80.77% to reach $4.7 billion in 2023 from $2.6 billion in the previous year. Now, the president of the chamber, Ismail Balogun, disclosed this at the 2023 Equipment and Manufacturing West Africa exhibition themed Reigniting Manufacturing to Drive Economic Growth and Development, which took place recently in Lagos. This was as industry experts at the event emphasized the importance of embracing technology, human capacity building, and collaboration to reignite the manufacturing sector and drive economic growth and development in Nigeria. Now, speaking at the event, Balogun highlighted the significance of bilateral trade and investment, technological advancements, and global engagement. He emphasized that embracing technological advancements and engaging in global partnership would enable businesses to explore new territories and create mutually beneficial opportunities, which I agree though. The stock market has witnessed a significant surge following the smooth transition to a new government, with investors recording a 1.505 trillion naira gains at the end of the day's trading. Equity researchers had predicted that a violence-free election and subsequent smooth transition would impact positively on the market. Consequently, at the close of the first trading day post-inauguration, the benchmark all-share index rose by 5.2%, representing the biggest single-day gain in 2 years to date. Similarly, the market capitalization of all equities rose by the same margin to 30.350 trillion naira from 28.845 trillion naira in the last trading session. Economists and investment analysts that spoke to Newsment attributed the positive sentiment to the smooth transition and the reform prospect of the President Bola Tinubu's administration. Well, that's all we can take on business this week today. My name is Chinwe Nwokocha, and from all of us here at Viewer Television, we say thank you and see you same time next week. Bye for now.